Hello, chart watchers, and welcome to this Tuesday, April 24th Market Watchers live show with your hosts, Tom Bowley and Aaron Swinland. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Well, today we had a nice start to the day, but things have turned a little bit negative. See the Dow Jones currently down 118. Actually, let me get a refresh. I want to make sure I have the latest because things have been moving. Actually down about 140 points now on the Dow Jones. So we are weakening. You can see us down testing a key moving average. The S&P 500 down 8, the NASDAQ down 47, and the Russell 2000 on a relative basis continuing to perform pretty well, up 6.5 points despite the weakness we're seeing in other areas of the market. 10-year Treasury yield continues to move up, went above 3% earlier today, currently at 2.99%. That increase in the yield has been strengthening the dollar, and that in turn has been resulting in relative outperformance by those small cap stocks in the Russell 2000. Volatility index earlier today down in the 15s, but it has recovered with the renewed selling in the Dow and S&P, and we do see the VIX now up 3.6%, back near the 17 level. Financials doing well with the rise in the Treasury yields. You can see as the yield has been moving up here over the past 4 or 5 days, we are starting to see the financials make another move, although on a relative basis, they're not performing as well as I would have expected. A couple of areas today within the financials. You can see real estate services testing a very key area, possible breakout out of a cup and a little handle here. Really nice day today. If we can break up close above 190, that would be bullish for the group. The Dow Jones U.S. Banks Index also having a nice day, but again, kind of like the financials, not great performance recently. Given how the 10-year Treasury yield has been moving higher, I would have suspected or expected that we would have broken out on the banks. But nonetheless, we are up today and performing quite well on a relative basis. Materials having a tough day today. We'll talk about that later in the show. Industrials also declining pretty significantly. This is the worst performing sector right now. And a lot of the reason is defense stocks are struggling after Lockheed Martin reported pretty decent results. I did not see if there was a downward guidance for the year, but you can see after opening up, Lockheed Martin was threatening a breakout to new highs at the open, but things have changed considerably since then. You can see this huge red candle, very heavy volume on Lockheed Martin, and we'll take a look at that a little bit more as well in just a few minutes. But first, let me bring in my co-host, Aaron. How are you doing today, Aaron?
I'm doing great as usual. I think one of these days I'm going to say that I'm not great. I'm not sure when that will be because usually I wake up and I feel pretty great. Got a good day coming up, 85 degrees. And hey, congratulations to the Caps.
Boom. We got to win.
Boom, baby.
Yep. We can beat just about anyone except the Penguins, and unfortunately that's who we have next. So we have lost 9 of the last 10 series against the Penguins in the playoffs. So 1 out of 10, the risk reward's not looking good on this one.
Yeah, at least on the betting line, probably. But I think they can do it. The Ducks actually swept them this regular season. We had played them 3 times and kicked their butts all 3 times. So you can do it. The Caps can do it.
Yeah, I was just going to say the regular season, though, is usually not our problem. It's normally the playoffs, and we haven't really had a great history against them. But, hey, it's a different series, a different year. Who knows? So I'll try to be somewhat optimistic and see if we can get through this next round.
As they say, they're due.
Yes, they are due. But I know we got a busy schedule, so I'm going to let you get through the announcements and the agenda for today.
Indeed. So we have tomorrow, Gaddis Rose will be here, and I'm sure he's going to have some great topics for us. I'm going to be doing a workshop on Thursday, and I'm going to concentrate on moving averages and a good refresher there. And then we have on Friday, everything stock charts. So you'll get to learn some new tip or trick from one of the experts at stock charts. And as far as today, we are going to start off with a new segment called Inside the Lines, and we'll explain more about that when we get there. Our second segment, we're going to be doing our regular scooter report and let you know who the big scooter movers are. 10 and 10 to 1. Our first symbol is going to be Shake Shack, which is SHAK. So if you want to go take a look at Shake Shack, you can do that. And finally, what would you do? Our question is already posted in the polls section of the chat window. So go ahead and go take the poll and you'll get to see what the what would you do question is about. And with that, I'm going to turn it back to you, Tom, for the technical news and headlines.
Sounds good. Well, here you can see the 10-year Treasury yield, which I was pointing out earlier. It's been a big move. It continued today, putting in a new high, taking out yesterday's high, and we did go through 3%, 3.003%. So just psychologically, that's a big level. I think in the whole scheme of things, really not that big a deal. 3% is still very close, much closer to all-time lows and historic lows than anywhere near the highs that we experienced back in the 1970s and 80s. So 10-year Treasury yield at 3%, not a huge deterrent for me in terms of investing in equities, but there is a lot of talk about it. We're going to have to get through all of that. And to me, that's just adding to a lot of the consolidation that we're seeing. But the 10-year Treasury yield did back off of 3%, currently back down at 2.99% or just below. We had some really solid economic news out, mostly in housing. The February Case-Shiller HPI came in with a rise of 0.8%. Market was only expecting 0.7%. Then the February FHFA House Price Index came in with a rise of 0.6%. Market only expecting 0.5% rise. And then March new home sales came in and really swamped expectations, coming in about 10% higher than expected. 694,000 units. Market was only looking for 630,000 units. Finally, at 10 a.m. this morning, April consumer confidence came in at 128.7. Market looking for 126.1. So literally a superfecta there for across the board better than expected economic reports. And so that is helping the 10-year Treasury yield climb and test that 3% level. I did want to mention, I've gone over this several times, but I think it's worth continuing to mention that as these Treasury yields move up, one of the things I like to follow is how the U.S. Treasury yields are doing relative to Germany. And you can see we have continued to move higher. For the most part, the dollar goes along with this trend, and it makes sense. Back in Economics 101, as Treasury yields go higher, normally higher interest rates strengthens the currency. Now, since I took Economics 101, we've seen a lot more global tendencies in global business and so forth. And so you have to kind of compare what's going on here in the U.S. to what is going on around the globe. That was not so much the case 40 years ago, but it is now. And so as we've been seeing the rates rise here, what I would have expected with the U.S. Treasury yields rising faster than what we're seeing over in Europe, I would have expected to see the dollar moving higher. We have not been seeing that over the past several months. And I pointed out two other periods over the last 10 years where that was the case as well. We saw it in 2009 where the yields were moving up and the dollar was moving down. We saw it again in 2013 into 2014 where the yields in the U.S. were moving up and the dollar was moving down. Each of the last two times, though, we saw this negative correlation print and then reverse back up in a big way, meaning that the two started going hand in hand together again. And in both instances, it was the dollar playing catch up. It was not the yields coming down. It was the dollar moving higher. So you can see here that this trend line has broken now to the upside. And I thought the dollar index was at a major support level. If you look back to the triple top that was in 2008, 9, and 10, you can see that we came all the way back down and tested that breakout. And then if you connect the lows and use this trend line, you also come in right around $88. So I've been watching the dollar to see if we were going to break down or break out. I would have been surprised if we had broken down given what the Treasury yields are doing here in the U.S. relative to Germany. But hey, anything's possible. Instead, we are starting to see the dollar move up. And we talked about this on yesterday's show, but the UUP clearly made a big breakout here, moving up to multiple month highs, getting back up above the 2380 level, almost touching 2390. And that came after we put in essentially a triple bottom down around 2310. So I think the dollar looks strong. And if I go back to the chart, you will see that what normally, actually not this chart, let's go to the other chart that I like to follow. Basically, it's the same chart, except I added the Russell 2000 versus the S&P 500. And in both of those instances where we saw the dollar take off, we also saw significant outperformance by the Russell 2000. And that's because the rising dollar doesn't have any impact on the bottom line of companies that do business exclusively in the U.S. But companies like the S&P 500 that comprise the S&P 500, they're multinational companies that do some of their business, or in some cases, a lot of their business overseas. And when the dollar is rising, that impacts their earnings in a negative way. It cuts into their earnings. They have currency translation losses when the dollar is rising. So this kind of makes sense to me that when the dollar is moving higher, you would expect to see the Russell 2000 outperform. And if you take a look, earlier this year, we had about I'd call it a triple bottom in terms of relative strength, Russell 2000 versus the S&P, and we are moving up. So I think it could be the start of what we saw twice in the last 10 years when we did have those negative divergences, but negative correlations in the treasury yields here in the U.S. relative to what was going on with the dollar. But here you can see that we are starting to turn back up, just like we did in 2014, just like we did back in 2009. And so I think this is a big component of trading strategy here over the next couple of months. I'm focusing much more on some of the smaller companies or the Russell 2000 ETF, which is IWM. That to me makes more sense with a rising dollar environment. Now, if you don't believe interest rates are going to continue to go up, you think we're topping at 3%, then this strategy may not be the one you want to follow. Because if the treasury yield stopped going higher, then I would suspect that it would probably be a drop in the yields that would come back in line with what we've seen in the past, rather than a move higher in the dollar. But I believe we're going to see that dollar moving up. I did want to talk about just a couple of industry groups. I mentioned the real estate group at the top of the show. This is the Real Estate Services Index, top performing group in the financials today. And you can see here, beautiful cup. You had a nice uptrend. Here's your equal highs with that rounded bottom. Pulled back at the 20-day, and we're trying to make a breakout. So that would be significant from a technical perspective if we could make that breakout. The banks I mentioned earlier. On a relative basis, this has been a group that's not performing well. I mean, here we have the 10-year treasury yield breaking out the new highs. What's going on with the banks? I'm not quite sure, to be honest. I would suspect that we're going to start to play catch up here, but we got to make a breakout. I think 480, which was where we stopped the last time. You've got the 50-day moving average at 483, and then you've got major gap resistance and price resistance at 485. So I think there's a lot of overhead resistance on the banks. If we can break through 485, then I would suspect we'll see some continuing movement to the upside. Lockheed Martin, I mentioned earlier, they came out, they beat top line and bottom line, I believe. Let me see if I can pull that up. I thought I had it, but I don't have those numbers in my notes. But anyway, I do believe that Lockheed Martin beat top and bottom line, but they gapped up and have completely fallen apart here. The thing that's interesting on the relative chart that I like to follow here is that we had the top, clearly 360 was an issue here for Lockheed Martin. But notice the index, the defense index. Each time we were topping on Lockheed Martin, we actually were putting in higher highs on defense stocks. And so what that means is that Lockheed Martin, on a relative basis to the defense group, was not performing well heading into their earnings. And their failure to make a technical breakout, I think, has triggered some more selling here on Lockheed Martin. The group itself has been very strong, but it is starting to turn down, and I wouldn't be surprised to see defense stocks maybe take a breather because they have been such a strong area of the market, and maybe we'll see that money rotate into other areas such as banks. Let's see. Got maybe just a couple or another minute or so here. Let's take a look. Well, tell you what, just to kind of summarize here before we move on to upgrades and downgrades, I'm going to go back to the main page. I always like to start with the sector summary. You can see today that utilities are now leading, financials still having a very strong day, but look at the industrials and the materials down here at the bottom. And if you click on the sector, it will give you the groups within that sector, and you can see defense stocks are the weakest today, along with commercial vehicles and trucks. And with that, we do have a couple of upgrades and downgrades, and I'm going to turn that over to Aaron. What you got, Aaron?
Yep, I have 2 upgrades and 2 downgrades for everybody. And here we go. So this is the list. Those are your downgrades. These are the upgrades. Let's go ahead, and I'm going to start right here with the first downgrade. HSIC, Henry Schein. All right, so what we like to do here, at least what I like to do here, if I can get my, there we go, just running a little slow. All right, so what we like to do is just look at what's going on the chart after an upgrade or downgrade. And downgrades I like to look at as possible entries, because you usually get a big pullback on a downgrade. But today on the downgrade, we see a 1.25% rise on HSIC. And honestly, this chart looks quite good. I've got the PMO rising. It is getting a little bit overbought, but look at that scooter move, and the OBV volume has been trending higher. You could make a case here for a rounded bottom. This is, those two are kind of even, but I'm looking at more of a rounded bottom. We had that gap up yesterday, and now we're trading above this area of overhead resistance. So I like the chart despite the downgrade. And also look here in the thumbnail where I've got the arrow here. The 20 is just crossed above the 50-day EMA, and that gives us an intermediate term trend model buy signal. So everything here is really lined up on the chart quite nicely, despite the downgrade. Skyworks Solutions, the other downgrade we had today. And this one does not look quite so healthy. This one, I can see why we had a downgrade. And, we're starting to hit these annual for the year lows. So what I went ahead and did is, after looking at this, I went ahead and moved it to the weekly chart just to see what we can see as far as support and resistance. And you can see that breaking that horizontal support there at about, looks like 92, that was some serious support to be broken. And now when we start looking at where's the next area for support, possible support, I guess you could say at about 80, right here at these previous tops. But this is just a bad looking chart. And you can also see that the 17-week EMA has just crossed below the 43-week EMA. And before I get all these questions in the question box, I use the 17 and 43-week EMAs just because I like the way they react when they react on a weekly chart. And while we don't use them for official market timing signals with decision point, I still find them interesting to look at. Look at the ugly weekly PMO. There's just nothing good here with Skyworks. So I would definitely avoid that. BP was one of our upgrades today. Really nice breakout on the upgrade. We're getting a little bit overbought on the PMO, but it doesn't really seem interested in turning down just yet. And, again, you want to see these really nice breakouts and then a sustained trading above that resistance. And I like the looks of that. Scooter is improving. OBV is trending higher. So I think everything here looks pretty good. I would just be a little bit, not concerned, but I would be watching closely on that PMO just because it has gotten a little bit outstretched there. And if you wanted to just take a quick peek at the weekly chart, you can see we're hitting, well, I'm going to even go back to a monthly chart. Let's see how. Yes. So we're getting ready to hit this overhead resistance here. I mean, granted, this is a monthly chart, but $46 is right about at, looks like the all-time highs if we get there. So that's some pretty significant overhead resistance, but I think the chart looks pretty good. You can see the weekly PMO is also looking pretty good. And that, I believe, let's see, one more, Discovery. Here we go. And I thought this chart looked fantastic. Look at that scooter just bounding right up into the hot zone. The OBV is maybe not as great, but you can see rising bottoms on it here, and that matches with the rising price bottoms. So that's a bullish confirmation on a PMO buy signal. And then look at what we've got going on with the EMAs here. Just got a 20-50-day positive crossover. So that's a decision point buy signal in the intermediate term. And then you can see that 50-day EMA is just about ready to cross above the 200, and that would put Discovery in a bull market configuration as far as decision point is concerned. So you'd get a long-term buy signal out of the trend model there. We've already gotten the intermediate term trend model buy signal. So everything looking pretty good, nice gap up. I would be looking for a move up to that $27 range. I think this one looks good. And with that, I think it's time to move into our first segment, which is brand new. And I'm going to let you take that away first, if that's all right, Tom, because you came up with this brilliant idea.
Well, it's fine. Let's go ahead and jump into Inside the Lines. This is a segment where we are going to dive into the technical picture for stocks in the news. So, of course, it's earnings season. Many companies are seeing their fundamental picture highlighted. But rather than be influenced by the headline news that you're probably seeing on CNBC, Aaron and I are going to look inside the lines at the charts to give you what our most current technical outlooks are for each of these stocks. And so I thought I'd start off with Caterpillar. That's been in the news a lot. And of course, when we had Julius on here last week, that was one of the stocks that he liked that was starting to turn a little bit more bullish. Now they did report earnings, and I always like stocks to wait. Let's see how the reaction is and so forth before we get too involved in the stock. So that's what I would want to do here with Caterpillar. But just looking at it and the way it looks today, I do want to say that their top line, they reported 12.86 billion in revenues. The market was only expecting 11.58. So a huge beat on their top line. Bottom line, $2.82. The market was only looking for $2.11. Now, there's no doubt the reaction here initially was very positive. It actually sent Dow futures moving much higher in pre-market action today. But we've seen a big reversal on Caterpillar. And of course, a lot of the Dow stocks have reversed after that early strength. I still like Caterpillar, though. Despite the huge move to the downside, yes, maybe we'll come down here to this support area. But I still think this is a nice chart. I think the group itself has been moving a little bit lower. So I think that's a problem. But when you look at Caterpillar, we just had a recent breakout on Caterpillar relative to its peers. So that's going to tell me that I've got one of the better stocks within the group. So for me, it's really about trying to wait to see if we can get a breakout on the DJUSHR and whether or not that happens now or whether it happens in a week. I still am pretty bullish on Caterpillar. Up until a little consolidation here the past few months, this was a clear winner relative to the S&P 500, and I look for it to regain that relative strength. But first, we've got to see the Dow Jones U.S. Commercial Vehicles and Trucks Index break back out to the upside, and we haven't seen that yet. So I'm going to go bullish on Caterpillar despite the hugely volatile day and the big reversal. I think we're going to find some support relatively soon, and I look for strength.
All right. I will pull mine up now. And let's see here. All right. So there's Caterpillar. Let's look at that. It was actually requested as a 10 and 10 symbol. So I was like, no, we don't need to do it because we're going to do it right now. All right. I like it. I am bullish on Caterpillar right now as well. I have a PMO buy signal intact here. We did see the PMO top a little bit today, but we have obviously a very volatile trading day, and I'm not surprised to see the PMO react that way. But we are still seeing the OBV rising. It's funny because when I looked at this chart earlier today, the scooter was still above 70. So I think that's rather interesting. The 20 has turned down below the 50. This chart looks a lot different than what I saw this morning, I have to say, but I still like the breakout. We're holding. In fact, let me get this annotate button just so that I can move this arrow out of the way. There we go. Now I can see it. So you can see that we had that breakout right now. Even though we're hitting this big intraday low, it is holding above that declining tops trend line. And I think that is positive. So we're getting a really good pullback on this stock. And that means to me there's some opportunity. And, I would be watching this one fairly closely. But honestly, this looks like a pretty good entry at this point. I don't know what you think, Tom. I mean, that is a big decline today of over 4.5%.
Yeah, I would personally, I just let the selling slow down and see where it ends up the day. That's what I tend to do with strong earnings reports. I like to see how the stock trades a little bit afterwards. But yeah, I would suspect if we do get down to that recent price support that you're going to see some buyers coming back in.
Absolutely. Okay.
You got one for us?
I do. Let's go ahead and look at Harley Davidson. And as far as the news on Harley Davidson, I read an article yesterday, and it said, oh, they're bracing for weaker sales, even though they're appealing to the younger riders. They're trying to do their best to do well. Sounded like they were in a fairly, not a bad position, but they were struggling. And then, of course, this morning it comes out they beat street forecasts on top and bottom line. They are maintaining their full year forecast. We had actual revenues come in at 1.36 billion versus 1.26 that was expected, and earnings came in at $1.03, and the expectation was just 89 cents. So you could see yesterday with the news article that the street was expecting less out of Harley, and then they came in and beat all these forecasts. So you can see a really great breakout from this declining wedge. Falling wedge. Look at the PMO has just turned up. So, it makes sense when you come out with that kind of, those really great earnings. But I thought it was interesting because it seemed like there was, an attempt to scare people out a little bit yesterday, shake some out. And now we've got this big breakout. Look at the PMO. We were already on an oversold PMO buy signal. And now we got that bull kiss, came down, tried to pull in those, get all those sellers in, and now the momentum is great. It's heading back up. OBV, not impressive. Scooter, not impressive. But I like the breakout, and so I'm thinking Harley still looks pretty good. You've got at least up to, I guess if you want to be conservative here, you could get to $44, but I think just even that first area of overhead resistance isn't up here until $45. So I think you could still get a pretty good run before you'd get a pullback.
Sounds good.
Yeah, so I don't know what you're thinking.
Yeah, I'm also bullish here on Harley Davidson. I think first of all, and we'll look at the PPO in just a second, but there is a positive divergence on these lower lows, and so I do think that an argument could be made that the selling is out. Or maybe wearing out. A lot of the volume that we saw initially on the selling, it seems like as it goes down further and further, the volume for the most part has dried up. Today, as you mentioned, they did come out with some great numbers. The stock responded very favorably, went all the way back down, filled the gap, and is trying to turn back up. So I'd like to see how it finishes. Clearly, if it goes back down and breaks to a new low at the close, that's going to probably change my mind and opinion on the stock. But I do think with this positive divergence in play, we could be looking for a move back up to test the 44 level, like you mentioned. I think so. From a short-term trading perspective, I actually like the numbers, the fact that the stock's been going down. And just to give you a quick sense of the divergence here, you can see the PPO rising, just like you were showing your PMO rising, even though we did put in lower prices. So I think there's some valuation arguments to be made on Harley Davidson for sure. And even technically, I think that some of the slowing momentum or some of the selling momentum appears to be slowing to the downside.
Exactly.
Do you have something else to add?
Nope, no, I'm sorry. Go right ahead.
That leads us to a third stock, which is Google. Google reported last night 24.86 billion in revenues. The market only looking for 24.2, so a very solid revenue quarter for Google. And earnings $9.93. The market only looking for $9.21. Big beat top line, big beat bottom line, and the reward for the stock is down $53. So again, this is one of the reasons why I don't like to hold these stocks into earnings. I mean, you can already see based on what we've shown you with Harley Davidson, what we showed you with Caterpillar, and now Google, that solid earnings doesn't always translate into great results coming out of these earnings reports. So I just think it's too much risk to try to figure out what is happening. But I will say this, Google, from a long-term perspective, after moving up, it broke out at about 1,000 here, had a double top. And each time we've come back down to 1,000, that's been a great buying point. We're sitting at 1,019 right now. I think from a short-term perspective, Google is a buy. I like Google.
Okay. And I believe this is one that I went bearish on. So let's go ahead and look at what I had over here. I want to look at the annotated one. There we go. So honestly, I'm not liking it. I think you're right, though. If we get that move down to 1,000, I would definitely be reevaluating. But in the meantime, I'm bearish on Google, and here are some of my reasons why. So first of all, of course, I've got that topping PMO below the zero line. We got the buy signal. We got a little bit out of it, but we're already coming down and failing. I didn't annotate it, but you can see a rising bottoms trend line that was broken today with this decline. And notice the volume. I mean, we've had some serious selling here over the past 3 days. And of course, today we're even looking at, well over average, and we're not even halfway through the day. We've got the OBV is already broken below that rising bottom. See, this is from yesterday on balance volume. This is not counting today's volume, which is going to clearly take the OBV well, I'm guessing below this previous low. So as far as volume, as far as momentum, look at even the scooter is in decline. I'm not liking it at this point. But as I said, so I'm bearish on Google right now, but I could, I would wait and look at what happens at that 1,000 mark. If it can hold that 1,000 mark and start to make a move back, of course, that would bring your PMO to turn back up. And if we got some good positive volume, that would bring the OBV back into play. But at this point, I don't think it just doesn't look too healthy to me. I'm not particularly a fan of Google right now. So,
okay. Fair enough.
All right. And okay, so the next one that I'm going to talk about is Lowe's. And Home Depot really are in that same space. The article was about both of them. But the article was certainly more biased to Lowe's. And they just were rated and outperformed by Wells Fargo. And the news article said that, there's tailwinds for the home improvement space, opportunity to take more market share from Home Depot as far as Lowe's. As far as Home Depot, there's a good entry right now after a 15% drop. So looking at that home improvement space, and you may want to look at the industry group while I'm putting this together too. I don't know. I did look at seasonality on both of these. I wasn't impressed. So let me bring up Lowe's. And I'm going to just show you the seasonality right now. I know that's usually your shtick, Tom, but I thought, with them talking about this is a good time to get in. And, not real impressive. We're talking about, on average that we're going to see in May and June declines. We're not even seeing really good moves upward as far as seasonality is concerned. And if you look at Home Depot, it's pretty much the same. And I will extend this. And yeah, as you can see, May and June, we're getting ready to go into May and June, and neither of those 2 months look that good. That being said, though, I am still going to be bullish on Lowe's. I believe that's what I was going to do. Let me see here. Yes, I was going to be bullish on Lowe's, and it's not particularly impressive. And I have to say, I wasn't looking at a PMO sell signal, and right now it looks like we're getting ready to have one just since I started doing this chart earlier today. But I still like it. You can see that we've got a rising PMO, those rising bottoms, and then when you compare it to the price bottoms, they're mostly even trending a little bit lower here when you go from here to here. So I would say that looking as far as the PMO is concerned, I would look for a move at least to the top of this trading range. And you have the breakout on the scooter. OBV has been fairly consistent. We are starting to see a bit of negative divergence that was going on here. So anyway, at this point, let's see. I would have to be bullish on Lowe's. And I'm going to just peek in here on the weekly chart. And you can see we're at some very interesting support here when you look at it at about $80. I mean, it's not the best thing. I wouldn't be running out to go buy this right now. But I still think overall, we're looking at a decent chart. I mean, I think you could still do well just getting up to the top of that trading range. But I think it looks pretty good. I agree with the story somewhat, I guess, on that.
Yeah. Well, both Lowe's and Home Depot did. They were initiated. I'm not sure of the firm, but they both were initiated with buys, I think, today. So that did result in gap ups for both of them. But Lowe's, I'm bearish, and I'll tell you why. First of all, the stock was doing very well along with the home improvements group heading into 2018. But as the market has tried to rebound, first of all, home improvement stocks have not been performing well. Lowe's gap down has not been able to get back up above that gap resistance. And so I just don't think it just kind of has that bearish flavor. Even looking at Lowe's relative to its peers, you can see it just broke down to a new relative low in 2018. The relative to the S&P, it's been very weak over the last few months, as I was mentioning. And then the group itself has been pretty bearish. But the primary reason why I wouldn't be interested in Lowe's is that if I was going to go into this space, I'd go into Home Depot. I think Home Depot, you can see on a relative basis, is actually near a relative high with home improvements, in that group. And even though it has struggled against the S&P 500, it's mostly because its group has struggled against the S&P 500, not so much because of anything Home Depot is doing. So I think if the group bounces back, I would actually be more in favor of Home Depot than Lowe's.
Mm-hmm.
So
That's interesting because the story too was saying that the story was preferring Lowe's versus Home Depot because they think they're going to take some market share from Depot. But I have to agree with you when you look at those two charts. Home Depot certainly has a much better configuration.
Yeah, and I prefer to see what people and investors and analysts are doing with their money instead of with their lips.
Mm-hmm.
A lot of times you get lip service on CNBC and so forth, and then you look at the charts and they just don't make any sense. That doesn't support anything you're hearing on CNBC. So that's why we're doing inside the lines, because to me, the technicals are much more important than the fundamentals. The last one we want to get into this is FCX, which is Freeport McMoran. And this is in the non-ferrous metals area, which is dragging the basic materials sector down today. The stock came out, or the company came out with earnings. They did beat on the top line, 4.87 billion versus 4.76 billion, but they missed by quite a bit on their earnings, 46 cents versus 58 cents expected. And we have got this huge red candle on what appears to be, or what could be, the highest volume that we have seen in a long, long time on the stock. I think that this is mass distribution taking place on the stock. I don't like that. Now, if we got a big recovery later today and we were back at 18, then we got a completely different ball game. But right now we are in breakdown mode. The group, as you can see, is in breakdown mode, taking out its 2018 lows. This is kind of an interesting chart. I think because FCX is basically the index, I think that's why you're not seeing too much action here. But looking at it relative to the S&P 500, which is more important to me, we're getting another breakdown as well. So I am not a fan. I'm a bear FCX at this point, again, unless we see a big reversal later today.
All righty. Let me get mine ready to go here for FCX. Yeah, I don't like this one at all. Okay, let me get you my screen so you can see.
What's interesting here is that yesterday I was just talking about a possible inverse head and shoulders, and it's completely been busted.
Yeah, absolutely. So this was what I noted on FCX, and yeah, it's pretty darn ugly. There's really nothing that I saw here that would tempt me. I mean, look at the EMAs here, the 520 and 50. It looks like today are going to completely reconfigure into the negative, the most negative you can be, of course, with the fastest on the bottom and the slower of the three on the top. So you don't want to see that kind of a configuration. And seeing a 2050 negative crossover, that gives me an intermediate term trend model neutral, right out the gate. We're getting ready to hit some interesting support. So I'm not going to lie. I mean, there's something to maybe look at here, but everything else is so negative. there's so many other potential opportunities out there versus Freeport, McMoran at this point. So I really didn't like it. And I think that's a pretty easy bearish one to go to.
Yep. And so let's summarize. We got through 5 of them today inside the lines, and this is what we came up with. Those are the symbols, of course, all except for Lowe's relating to earnings. And there are kind of our summary, mine and Aaron's, as to what we thought of each of these stocks. So definitely in the survey after as you're exiting, we'd love to see what you thought of this segment. Because I think it is interesting to take a look inside the lines, look at the charts, as opposed to just trying to follow what's going on from a fundamental perspective. And with that, we are going to turn it over and move into the scooter reports. Aaron, what do you have for scooter reports today?
All right. I am just going to go ahead. I want to look at the big movers today, so we'll do that. And I'm just going to do that straight off the member dashboard. And so you can go right in here. And again, you can select, what are the big movers as far as price action. But we like to look at the stock charts technical rank. And if you want to learn more about the scooter and the stock charts technical rank, just go right into Chart School. You can do that here. You can use the search box, put in scooter, and then you can read all about how we create those rankings. And just in general, it really focuses more on the intermediate and long term. So it's always very interesting to see these big short-term pops, because we're looking at something that in general, it does have a bias toward the intermediate to longer term. So let's look at these are the top 10, what's currently, sitting at the top as far as our large caps are concerned. I want to look at the big movers. So let's look at who's doing especially well. And that is done by looking at the change in their ranking. And so these were the 10. And I'm going to just pull them up in Candle Glance. And this is on my personal account. And I've set up my Candle Glance in such a way, let's get this, that I get to see a 6-month chart and I get to have the PMO on it. And then, of course, you get to see the price pattern. And then this is the 20-day EMA and the 50-day EMA. So I can see whether I'm on intermediate term buy signals or not, or if I'm starting to move into them. So, my first thought is I'm looking at the big movers. I want to know if there's any opportunity here, because not only are we seeing, the scooters going, I want to see whether there's anything interesting going on as far as the PMO as well. And so I'm looking just, again, I haven't looked at this. I'm just doing this right now. So you're getting my thoughts as we go. And so the first couple that I find interesting to look at, Fifth Third is especially interesting. I've just gotten that buy signal. So I'm going to take a peek at that one. And you can see, of course, we got the big gap up. That would explain the big move on the scooter. But you could see it had pulled back, and now we're back into that hot zone. Look at the rising bottoms on the OBV and compare those to the bottoms on price. And those were mostly, I would say stagnant here, moving more horizontal direction. So I think that was positive. As far as volume is concerned, the PMO is just now logging on this buy signal, and it's coming in near-term oversold territory. So that gives us, that looks really good as well. Probably when I see a 4% move in one day, though, I would probably be looking for a bit of a pullback before I'd get overly interested. But I think that breakout looks great. Getting ready, it looks like, to test some of these highs back from March. Could be an interesting play. So let me go back. That was one of them that caught my eye. And looking at some of these others, I like this breakout on this. I'm really paying attention to these rising bottoms on the PMO, and we're seeing the same going on here with SAP. So let me see if this is a good chart or a bad chart when I look at it. All right, so we got the giant gap up. Really interesting. We saw this distribution going on here with the selling, and you can see what the effect it had on the OBV. Well, today, obviously, we're going to see very high volume. We're likely going to see this OBV pop possibly above these previous tops. So I'm looking at this. I like that breakout. Again, we've got these big moves to the upside, and sometimes you might want to wait for that pullback. But I kind of like this one. And I'm going to do this, and then I'm going to pass it back to you, Tom. And here's why. Look at this area of support that we have here that we're now trading above. And we've pulled back to that area. We have the PMO, it had that bull kiss, that fake out move, and now it's moving back up. It's in positive territory. I think this looks pretty good. And, you know, normally, like I said, I would wait for it to pull way back, but I think the fact it's trading above those, that looks pretty good. So with that, I will pass it back to you, Tom. Let me know what you've got in the scooter report arena.
All right, let's take a look at a couple things. Well, first, as I've said, I'm pretty bullish the small caps as we go forward, just because of the dollar. I think rates are going to continue to go higher. The yield, 10-year Treasury yield, I think will continue to move up faster than what we're seeing in Europe. And so I look for the dollar to move higher, and that should relate to outperformance in small caps. So small caps is going to be where I want to focus. Now, you know, there are a lot of stocks in the scooter section of small caps. So what I wanted to do is just take a look. I'm a fan of technology. I'm a fan of the aggressive sectors in general. But if you pull up some of the groups or some of the industries within technology and compare, for instance, to the S&P 500, you could pull up software and type it in relative to the S&P. I do want to put it on a solid line chart. So here, whoops, not sure why that did that, but there we go. Okay, so here you can see on a relative basis, software has pulled back a little bit over the last week, but for the most part, you've got an area of the market that's doing really well, and we could go back even a few years if you want to just take it back further and get a real feel for this group and how it's been outperforming the S&P 500. So you've got to be thinking about software stocks. I mean, at some point it will pull back and maybe be a little bit more significant to the downside, but it does continue to put in higher highs and higher lows. And so this is an area of the market that you might want to consider within the small caps to take a look at. Another group that I was going to focus on here would be CT, DJUSCT, which is telecommunications equipment. And you can see also over the past several months, there's been a huge move toward the telecommunications equipment group. And they are currently breaking out to relative highs relative to the S&P. So this is going to be a group that I'm going to be interested in. So what you can do is you can go back to the member dashboard and you can pull up the scooter report. And the default is large cap stocks. But if you hit the drill down menu here, you can go to small caps. And then once you come up with small caps, it's listed in scooter order, but you can type in the areas just to bring up those stocks. So for instance, the telecom equipment. That's what we were looking at. So there you have, these are the small caps in the telecom equipment space ranked by scooters. So you can then go in and say, oh, this is the best ranked scooter. Let me look at this chart. Well, clearly it's overbought, but this is telling you that this is one of the best stocks out there. No surprise as you look at the chart. Watt, now this one maybe is a little bit more of a surprise. It had a huge move up back in December from 8 up into the 30s. So you're going to see this huge move away from its long-term moving average, which is why its scooter is going to be so high. But this is one that's been consolidating a little bit more. Don't know that I'm overly excited about it. I know Sienna is one that I've talked about quite a bit. I like Sienna. Beautiful move up with earnings in early March, pulled back all the way to the top of gap support before turning back to the upside. So if you happen to catch one of these at the right time, you might be able to find a key stock in, among the small caps that within also telecom equipment that's doing well. I'm trying to go down and just look at a few more of these. I don't want to go too low on the scooter, but here's 175 now. What I'm hoping is I just catch one just getting ready or just made. This one did just make a pretty nice breakout, DGII. Of course, the volume on this one's not great, but if I ignored the volume, a pullback down to about 1120, I think would be a great entry. You got a PPO that's rising, pullback to hit the 20-day moving average and price support could present a really nice reward to risk. I would just prefer having a little bit more in terms of volume. And then if I went to software, basically I can do the same thing. So let's go back down in software and look maybe down. Here's ePay. It's got an 82 scooter. This is a pretty nice looking chart. Big move up, nice volume, pulling back, getting very close to price support in the 20-day moving average. Stock was 41 a week ago. Now you got it in the 39s. So a stock like this is kind of interesting because it's in a nice space. It's a small company that should benefit from money rotating to small caps. And, we'll see. But for me, a stock like this is very interesting. So sometimes I use a scooter analysis or scooter reports after I already figure out where I want to invest. Now, you might be able to go into the scooters and actually find stocks that you like just from those reports. But the way I like to use it is to see what areas of the market I like and then drill down into the small cap scooters, looking at those various industry groups. So that's really what I had for this segment. And so there you have a quick little recap on what we just looked at on the scooter report and how we kind of got to it. And with that, I guess we are ready to move into the 10 and 10.
Indeed, we are. So let's see. We had a lot of people paying close attention today because we didn't end up with as many 10 and 10 requests as we usually do. Let's go ahead and bring us over there. So we had 23, and we usually average right around 35 or 40. So interesting that we came in with fewer. So with that, I'm going to definitely look at the RRG for the 10 and 10. And Julia said we should be doing daily if we're going to look at them for short term. And then you hit fit. And wow, there's a couple of very interesting ones. I think we'll probably hit the 10 and 10 here. We are taking, if you like the symbol requests in the chat room, because the very next symbol is going to be the most popular. So get in there and start clicking. So interesting though, I like to see what sectors are coming up most. Usually, yeah, we're seeing a lot of cyclicals, financials, and of course the technology right now. So very interesting. I will tell you that our first symbol is Shake Shack, SHAK.
All right, let's pull it up, take a look at it. Let's see. We are getting a little bit of a pullback here, testing that rising 20-day moving average. It's performing better than the market overall as it's broken above its 20-day, and it is holding it. I think that's got pretty interesting support right here around 43. So I kind of like it. Let me just pull up the area where the stock has tended to kind of pivot. I'm going to say maybe 42.5. You can see the low here. We gapped up above 42.5. Came down, we've tested it on multiple occasions. We went below it, came all the way back up, failed at 42.5, and then recently broke out. And as we broke out, you can see the volume starting to show a little bit of an increase there, maybe a sign of some accumulation. We've pulled back. I like this one because you can keep a fairly tight stop on it. A close below 42.5 would make me kind of nervous here, but I think that's got a shot to make a run up for 47. So I would be bullish Shake Shack.
All right. Okay, guys, what is the most popular in the room right now? And it is Square, SQ. We could embarrass me for my Monday setup that just turned south today.
Yeah, it's having a rough day today. Of course, it's
kinda.
It's below its moving averages. I do see some support coming in just a little bit below 46. So that's where I would maybe look for some buying to kick in on Square. Just kind of annotate that. So I think you can see after moving above 45, it looks like maybe 45.50 or so. After moving above that level in late February, came back down, tested it, made another move. And then, of course, with the selling, a little bit of increased selling, that level held again in early April before bouncing. So I think this is an area where you do tend to see some, I might even draw this other line in here because there's a lot of failures right in this 45.5 to about 47 range. We broke out, came back into this range, moved up, and now we're back into the range again. So that's why I think maybe we'll see a reversal here. If I was on the sideline watching, what I would prefer is to see a false move to the downside, similar to what we saw back on the first day of March, where you have a tail below and then you come back up and close above. I think that could be a signal of a reversal. I'm a fan of Square and this financial administration space. I like PayPal as well. It continues to put in higher highs and higher lows, but it is a very volatile group.
Yes. All right. Well, hopefully it'll turn itself back around by this Monday, so I can get something out of that. Monday setup. Okay, so the next one is for our Canadian friends from the oil and gas producers, GTE.TO.
Oh, beautiful chart. Hard not to like this one, other than the fact it's just maybe a little bit overbought, but you're in a great space. Now, energy, as I've been writing about, we've talked about on the show, energy has the highest scooter rank now among sectors. So it is performing very well relative to the others. And you can see here, beautiful breakout. Volume's been nice on the move to the upside. PPO looks great. For me, it's just, I don't want to chase, but it is a stock that I would be interested in. And on a pullback test of that rising 20-day moving average, I think that would present a great reward to risk entry.
All righty. Next one I have for you, this was one of the RRG outliers, DRNA, and that's Dicerna Pharmaceuticals.
Okay, well, I've never heard of the company before, which tells me it's probably a pretty small pharmaceutical. I think you just have to be careful and be willing to accept a lot of risk if you're going to be into a stock like this, because these kinds of stocks can be very rewarding financially, but they also can be very dangerous. Many of these small companies rely on one or maybe two products, and if something happens, they come out with a bad announcement. I've seen market caps of companies like this be cut in half or more. And I just want to, keep it real here, because this is in an area where it can be extremely volatile. You can see just from 2 days ago, the stock traded in one day from a range of $9.80 up to 14.5, or a little bit above. And clearly that hit a resistance level, and then the sellers kicked back in. So you've got a stock that's extremely volatile. Now, having said all that, looks like it's acting pretty well. I like the fact that it's got the huge volume and a nice solid hollow candle. We pulled back yesterday after a nice open. Now we're rallying again. I think we have a shot to move back up to that 14.5 area, but I would still, if I was going to trade a stock like this, I would just keep it a very small piece of my portfolio. Not a lot of shares, not a lot of exposure.
Okay. The next one, which was a big outlier, was in telecom, Applied Optoelectronics, AAOI.
Yeah, this was a darling for a while.
Mm-hmm.
Really went through a lot of problems, and now it's starting to act much more bullishly as it gets up and tests some overhead gap resistance. So let's take a look. There was a big gap back in February. Stock had closed over 34 the next day. Look at the volume coming over 10 million shares on this gap down. And notice where we've been trying to move up and test here the last couple of days, just above that 34 area. So I think we're starting to hit some very important resistance. But I do have to admit, I like the fact that we are hanging above the 20. We've seen the 20 cross back up above the 50, which we haven't seen in a long time. PPO is above the center line, which is, again, the first time we've seen that in a long time. And as we've been moving lower, you can see this actually took out the reaction high here, which I think is good. So I think the short term has turned much more bullish, but we do have to respect this gap resistance at about 34.5. And to the downside, I think the 20-day moving average, which is getting close to 29, that's the trading range for me now. I'm definitely turning more bullish here, but I'd need to see that breakout at 34.5 and continuing support at the rising 20-day.
All right. Let's see. We did get a question about, what is the minimum dollar volume that you look for in a stock? I told him I'd go down to about 20,000, but to me, it's about the volatility. If it's not too volatile, I'll take a low volume stock. But the problem is usually those low volume ones are highly volatile, and I just don't have the stomach for them.
Well, my short-term trading strategy really is designed to try and take advantage of short-term inefficiencies in the market created by our market maker system. And the problem with these small companies that don't have much volume is that their stocks, normally there aren't many market makers. You don't have the big firms like Goldman Sachs and so forth making a market in a company that offers that hardly ever trades, because there's no profit incentive for those companies to make a market in those stocks. So many times a stock that only trades 20,000, 50,000 shares a day will only have a few market makers, not like Intel or some of the others that have hundreds of market makers.
Mm-hmm.
And so the volatility can be severe because you've got just a couple of market makers that are heavily influencing the trading in that particular security. So again, I'm trying to limit my risk and my trading. And I think by taking on stocks that trade with, don't trade many shares, I think you're really taking on more risks. So that's why I don't look at them and I don't trade them.
Mm-hmm. All right. So from the only stock from the consumer staples area, Vector Group, VGR, tobacco.
Okay, well, tobacco stocks have been getting hammered, as we saw with Philip Morris coming out with their earnings recently. I do like today's candle if it holds. So right now, I think if I was annotating this stock, the big news for me is just, first of all, it's been coming down on heavy volume. So what I'm looking for is some sign that maybe we're putting in a short-term bottom. And right now that is a piercing candle where it's kind of it's a wannabe bullish engulfing candle, which engulfs the prior day's candle body. In this case, it doesn't quite. It's close. And by the end of the day, maybe it will. But a piercing candle to me is not quite as bullish as a bullish engulfing, but it is still a bullish reversing candle. And you can see clearly we had a downtrend because you need a trend in one way or the other before you can have a reversing candle in play. The other thing I would say is looking at the price support. I think it's pretty clear that we had some buyers stepping up at about 19 back in February, and that's right where we're trying to reverse again, right at the 19 level. So I'm not overly impressed by the group. I'm not impressed by the chart. But if I was going to trade it, it would simply be a price support, a bounce or a potential bounce off of price support, and I'd keep my stop tight.
All right. From the only stock from the materials sector, commodity chemicals, it's Rainier Advanced Materials, RYAM.
All right. I have to say I do own this one right now. So I'm down a little bit on it. I'm watching 2150 and that rising 20-day moving average. That's the level that I am trying to keep an eye on. So there was your breakout above about 2150, 2160, and you can see the volume throughout this move to the upside has been very strong, which I like to see. So I think it's been a great move. There was a reversing candle here, and when it pulled back and hit the price support, I think maybe I'm break even. I was thinking maybe it was in a little higher, but I remember that reversing candle. I might have gotten in around 22 or something. But anyway, I think you've got some gap support that comes in maybe around 2140. You've got the rising 20-day moving average at 2135. I think this is a pretty key area as it pulls back. It's going to want to hold in the near term. So I'm okay. I think the PPO broke out to a new high with the recent high. I think if it pulls back, hits the 20-day, it'll bounce. But that's also wishful thinking because I own it.
Yeah, that happens. Okay, let's see. From the banks area, and this one had a really nice RRG configuration. Key Corp, KEY.
I think we just looked at this one. I don't know if we looked at it yesterday or the day before. But I'll go ahead and take a quick look at it again.
Oh, we did. We had it yesterday. I apologize.
Yeah. There's hopefully I annotated the same.
Exactly.
Just quickly looking at it, it does seem like $20 is a pretty big area where it has held support in the past. We've been bouncing up against it. And so the move here, this reaction high around 20, the recent highs around 20, we wanted to get through. Now, we did that today. On the most recent low, we do have a positive divergence. So I may have even mentioned that yesterday, a possible 50-day test with that positive divergence. A breakout above the 50-day would be bullish. But currently, now that we've tested the 50-day, I maybe would look for a little consolidation between about 1975 and 2035 or so.
All right. Let's see. The next one I'm going to give you is MCore Group. It's in heavy construction. It's EME.
EME. Let's take a look. Oh, I don't like today's candle so far. I don't like those false breakouts. It is still early. There's still 3 hours left in the trading day, and so we could clearly move back up later in the day and actually get the breakout. But right now, if that was the candle at 3:45 or 3:50 in the afternoon, 10 minutes before the close, and I owned it, I would sell it because I don't like seeing those false breakouts above these prior highs. And I think if I draw the line across here using this auto support resistance, I think you're going to see that this is a pretty interesting level. Multiple tops at about 81.5. We broke above, then we were holding 81.5, then we fell apart. came back up. We've struggled at 81.5, and now look at that false breakout at 81.5. So short term, and I think this one gapped up on some really nice volume back here. So it's probably just consolidating before it goes higher. But in the very short term, as a short-term trader, I'd be concerned about today's candle.
All righty. Let's see the next one. Actually, the last one, I believe. I already gave you EME. The last one is eBay.
Yeah, I like eBay. I've been watching this one. I like that gap up above the 20-day moving average, and the pullback is now at price support and that rising 20-day moving average. So if I was trading, I would actually be a buyer on eBay. I don't own it. But if you look through, you'll see that that's been a pretty key area, right around $41. Printed a nice little hammer off a downtrend after a gap up there. We went below it, struggled coming through, and then look at the volume coming in. 20 million shares on the gap up above 41. And now we're coming back down. I think 41 is good price support. Your 20-day is at 40.92, which is just another 20 cents below where we are right now. And then you've got gap support, looks like maybe around 40.60 or so. I think this is an interesting area for entry into eBay with a closing stop maybe down below about 40.25, 40.5.
All right. And that concludes the 10 and 10 to 1. And you can see the stock symbols. We'll have those up for you. I will get those into the Market Watchers Live chart list with the annotations and all of that. Just go to the Market Watchers Live blog, look for today's recap, and you will find not only the timestamps, etc., for the show, but at the top of our Market Watchers Live blog is where you'll find our live chart list. You can go in, select these charts, save them to your chart list if you'd like, whatever you want. And with that, I am going to go and talk about, we're going to talk about ChartCon, but we did have a quick question while I get that screen ready. Is there a way to find out who the market makers are in a stock? Because you were talking about that as far as the low volume stocks.
Yeah, I used to know. It was either NASDAQ.com or maybe that should be a little research project for me. I haven't looked at that in a long time, but I used to. I'm just trying to take a quick look right now myself and see if I can come up with. There used to be a site, and maybe it's NASDAQtrader.com, but it would list every security and it would tell you the volume by market maker.
Ah,
what I recall. And like I said, it's been a long time. Let me look and do some research and maybe try to come back and talk about that more another day.
yes.
When I do
Yeah,
some
I
research.
know people are very interested, so I'm interested as well.
Yeah, you might be able to go to like a Google and just do a search for, maybe NASDAQ shares by market maker or something like that and see if you can find something. Or like I said, maybe while you're going through the market update in just a couple of minutes, I'll take a look and see if I can find something.
Oh, well, that's very nice of you. All right, so it is. ChartCon is coming up in August. It's an online conference. You can get to this page. Just go to stockcharts.com/ChartCon. I'm pretty sure that was flashed up there for you on the screen earlier. And right now, you can still get the early bird pricing, but that's going to be going away very, very soon. So it's only $199 right now for the event. And this is an online conference, as I said. So you can attend it live if you'd like you're doing right now, watching us live. Or you can just keep the recordings and watch them later. You can join in the middle. You can scrub back using the buttons, the rewind buttons forward. So it's very easy to attend, and you can watch us live, or you can have this on your hard drive for later. And we're going to be talking about reducing risk in uncharted waters. So we have an amazing list of guests. I mean, seriously, you've got Martin Pring, Dr. Alexander Elder, who I adore. His Trading for a Living book and Come Into My Trading Room are must reads. Tom McClellan, there's some great, we have some great folks on here. Oh, and that guy, Tom Bowley, he's pretty good.
Yeah, he's all right.
Yeah, he's all right. And here's the agenda of what we're going to be covering. And each of these is about an hour presentation. And like I said, you'll be able to keep the recording if you do attend. We'll have plenty of opportunity for some social interaction. So even though you're not there in presence, your presence is not at the conference, we'll still have ways to interact with you on social media and that sort of thing. Lots of fun. I highly recommend you check this out and that you sign up. I mean, $200. I mean, come on. I'm sure you could get some bit of information here that would save you thousands on a trade. So $200, come on now, we can do that. But yes, we've got a great lineup, so consider joining us online for that. And now I'm going to go ahead and go into a market update. And I'm simply going to go to our candle glance here, and I'm showing you how to get there, of course, from your member dash. I'm going to add the TSX, and let's add, what should we add, Tom, on the end? Let's see, let's try, let me add XLE. Let's look at the energy space a little bit. All right, so what's been going on over, these are 2-day charts, 10-minute bar charts, I believe, 1-minute bars. And as you can see, we started the day great. I mean, I had all these news stories popping up on my phone this morning. Hey, the Dow's up, Caterpillar had these great earnings, and it looked like we were going to have a great day. And I was thinking, I wrote a bearish article yesterday, so I thought, well, of course, we're going to have a great day. Well, it hasn't turned out to be that great. We're now starting to flirt with some intraday lows. The Dow is now down quite a bit. We can see that the S&P 500 is down almost 28 points right now, also flirting with its intraday lows. NASDAQ having the same problem. The small caps were looking pretty good. They stayed into positive territory except for the last hour. They've now moved down, following suit with the larger cap indexes right now. TSX, lots of choppy trading during the beginning of the day, but it does look like it's going to follow the US markets and head lower. Treasury yields, we did get up above that 3% level, but we have pulled back since then and reading at 2.98%. UUP is been in the negative territory all day after a great breakout yesterday. We're pulling back from that breakout on UUP, and consequently, gold, as you can see, is moving itself upward. We're starting to see some nice positive action. GLD reading right now at 126.13. USO is down on the day. And we can see that the volatility index is starting to shoot upward. I think this would be, I'm going to have to take a look at my VIX chart and look at that, give you guys an update on that to see if we're getting close to those Bollinger Bands. And XLE, as you can see, we were having a great day. Now it's pulling back with the markets and is now in the negative. And I'm going to go ahead and I am going to show you that VIX chart because I do want to see what's going on with that. And you can get to this chart from the Decision Point Live chart list, and you'll find that at the top of my blog, the Decision Point blog. So looking at these climactic indicators, this is what I look for, these penetrations of the upper and lower Bollinger Bands. Inverted scale, because I'm looking at these in the very, very short term. And when we get a really big push as far as the VIX moving higher, and we start penetrating that lower Bollinger Band, that's usually a sign that we're going to see a snapback, possible rally pop. So we haven't quite gotten down below that average, so I don't see anything overly interesting here, but we will start watching this to see if we can if it gets down to that lower Bollinger Band, and then I would start looking for that big rally pop. And with that, I'm going to conclude the market update. And is there anything you would like to add, Tom, before we get into what would you do?
Well, I'm just kind of looking at this NASDAQ trader site, so not really anything to do with the market, but anybody out there wants to become a market maker, here's how you can do it. It's going to take a lot of money, by the way. So I don't know if you're like me, probably you're not going to get very far as becoming a market maker. But yeah, somewhere on this site, maybe NASDAQtrader.com, I don't want to spend time in the show, but looking at market data, I don't know, maybe some of this.
we're looking, just for those who have joined late, we're looking to see where you might be able to find the market makers for certain stocks. And we're still looking.
Yeah, and I mean, there's a lot of reports. This site's pretty big and it's got a lot of information. I'll spend some more time looking at it, but NASDAQ Trader might be one of the sites that you may be able to find some information on. And if you're not really familiar with market makers, just Google what is a market maker and do some research, because as a trader, literally as a short-term trader, that's what I'm trying to take advantage of, the market maker system that we have. So anyhow, I'm going to go ahead and move on to the what would you do,
Yes.
which is Texas Instruments. I mean, that's the one we're looking at. They report their earnings tonight after the bell, and the semiconductors have been a little weak of late. So the question is, what would you do with Texas Instruments? Would you be a buyer, holder? Would you sell or short it? Would you just avoid it completely? What would be your strategy with Texas Instruments? So I don't know, Aaron, you want to give your approach first?
Sure. I will give you my thoughts. Let me go to where I need to go. No, I think I put it in here. So I'm going to check my chart lists, and I think it was demos. Yeah. Nope. All right. I'm not sure where I put the chart, but I'm just going to go right here and I'll start annotating as we go along. I'm not a fan. The PMO is not looking so good at this point. I don't like the volume that we're seeing on this. We lost the scooter. I'm going to go ahead and annotate because I do see we are at an area of very interesting support, however. And you can see right here, it lines up with these bottoms back from February and this month, April. And then it also lines up with these November tops. So to me, that should be a very strong area of support, as should the 200-day EMA. But I'm looking at this and, with that PMO heading lower, we're seeing a lower low on that PMO in line pretty much with these declining bottoms, declining tops really on the PMO since January, and that lines up with the declining tops on price. So that's a bearish confirmation. I'm not seeing anything that exciting here. The only excitement I could say is that we are sitting on some very important support. And if that can hold and we get that PMO to turn up, then we might be looking at something here. But as far as the daily chart is concerned, I'm not seeing anything that interesting. So I'm going to go over and we're going to go take a look at the weekly. Alrighty. And I did get a little quick message during this show from Carl. And he says one of the reasons we have the 17 and 43-week EMAs on our weekly chart is that they react very similarly to the 50 and 200-day EMAs on the daily chart. So you see those crossovers around the same time. You're going to see those 50, 200-day EMA crossovers. And, a similar situation as far as the monthly is concerned. We use different moves there. But look, right off the bat, okay, let me annotate this because this just doesn't look good here. And I am going to use this in red. So this declining tops line, right? And horizontal support line, that would be considered a descending triangle, which is bearish. But you could also see a double top right here. And that would be your confirmation line, which is exactly what we're sitting on right now. So if you've lost that, then you should expect a move of, well, let's see, 95 to about 115. So we're looking at a $20 move to the downside is what you should expect. So then we'd be down here at around that 80, 85 range, which is right along that support line right there. I'll draw that in for us. So, and look at PMO sell signal on the weekly chart. It just isn't looking so hot here. And I can't see anything really positive when I look at that chart. And I'll just take a quick peek at the monthly chart. And, we're overbought as far as the monthly chart is concerned. We've got a top right now on the PMO. There's clearly some issues going on here. So I am definitely in the bear camp as far as Texas Instruments is concerned.
Okay, fair enough. Let's see. Well, this is a really easy one for me. They're coming up with earnings tonight, right?
Mm-hmm.
So I'm not
But
going to.
if they weren't, maybe that's the way you should look at it.
Well, they were put on here because the earnings are coming up. So I'm gonna bail. I'm gonna bail and say avoid just because I don't hold into earnings reports. But I will, go through the chart and take a look. I think there's some positives here with Texas Instruments. I think there's some negatives. Huge gap down with very heavy volume back in January with their last earnings report. The selling that ensued after that, you can see, took us back down to about 97.5 before we finally got a little bit of reversal. I didn't annotate it, but this move all the way back up here was essentially the top with that gap down. Intraday, we got up to about 113.5. 2 days later, we got back up to 113.5 again. And then off of this rally, you can see 113.5. So 113.5 is going to be a big area of resistance if we get back up there. We've already failed multiple times there and on some very heavy volume as well. But to the downside, I'm looking for support. And I do think that Texas Instruments is approaching a pretty significant support here. Of course, with earnings, I throw technicals right out the window. I mean, we've looked at some earnings reports today in the show, and companies that look really good technically get a gap up like Caterpillar and then sell off. I know 3M was getting hit really hard earlier. Some of these stocks too it may not be earnings related. It could be dollar related. Some of these companies, because they are large multinational companies, some of which do a lot of business overseas, and the strengthening dollar could be, and the higher interest rates here in the U.S. could be sending a sell message in a number of those issues as well. But I think Texas Instruments has some interesting support as long as it doesn't violate it on the open tomorrow on a big gap down. I think you've got good support at 97.5. I would even maybe draw a line back in here to these lows in October and again in early December at about 93.5, 94. I think this is a range where I would maybe not be too surprised to see Texas Instruments start to regain some strength back to the upside. If it fails to hold around 93.5, I mean, this was a straight up move. So there's not going to be a whole lot of support beneath that as far as I can see. And when you look at the semiconductors, first of all, you definitely have a very volatile group. So you have to be willing to take on that volatility. Texas Instruments, though, relative to the semiconductor group as a whole, has been downtrending now for about 3 months heading into its earnings report. I don't like that. It's obviously downtrending relative to the S&P 500. And the final comment I'll make here is that semiconductors did actually break out relative to the S&P 500 in late March with the move that they had here. And then even the pullback was better, I guess, than what the market was pulling back. And that's what led to the relative breakout here in late March. But when the group was breaking out relative to the S&P, you can see Texas Instruments was not doing very well. So I just don't think this is one of the key areas, or, well, it is a key area, but it's not one of the areas where I think the market is looking for significant outperformance here. So I think their report might be a little, almost everybody is coming out with better than expected results. I just don't know that, I think it's going to be underwhelming.
Mm-hmm.
And so we'll see how the market reacts to that.
So you would be down as just avoid?
Yeah, I would just avoid it because that's what I do heading into an earnings report. I'm not going to take any chances.
Sure.
No, to me, heading into an earnings report as a short-term trader. Now, I understand if you're a long-term buy and holder and you've had Texas Instruments for 40 years, you're going to hold on. You're not going to get out for earnings and then get back in.
Oh, yeah.
I get all that. But for me as a short-term trader, I don't want to wake up and see something like FCX today or ride the roller coaster that is Caterpillar and 3M and some of the others. So I just choose to avoid holding into earnings reports.
Yes. So we're going to look at the poll here, but you can put me down as sell short, which is clearly in the minority. But I agree with you. If you're I don't know though. If I were holding on to this in an intermediate to long-term space, I don't think that I'd be, if I didn't see a really good bounce coming up, I would not be in this. So I honestly, I think being in the sell short category really suits me. A lot of times it's just avoid or neutral, but I'll go out on the ledge there because between those two terrible chart patterns, it's just there's opportunity certainly because we're sitting on that support level, but everything to me is pointing to it not holding that. So I'm going into the sell short category. And
I want to show one more screen. Can I show one more screen?
Of course you can.
Let me go ahead. This is a long-term chart going back to 1992 on Texas Instruments. So anybody who's holding it, yes, maybe short-term, the chart looks a little iffy. But if you're somebody who's holding and been holding for a long time, I mean, I don't know. I wouldn't be fretting the report. If you got in 2009 at $10, the stock's at 98. If I wake up and it's at 91, I'm not going to be happy. But still, you're talking about a stock that's been uptrending for quite some time. So I can get the buy and hold. That's not my approach, but I certainly can appreciate, Warren Buffett's made a fortune buying and holding long periods of time. So I'm not saying it doesn't work. It just doesn't work for me.
Right. And that's the thing, you hold some of these stocks, they pay you dividends. You can stay in them a long time, even if they're not necessarily, if they're volatile in the shorter term, you're still overall going to be doing okay. But so here's the results. And you said avoid, as did the audience. And I'm sitting in that sell short category. And kind of interesting. I definitely in the minority because I'm looking at the poll right now. We did have it up earlier. Only 16% are in that sell short category. So it'll be interesting. I might revisit this later just to see where we end up coming out on this in another couple weeks.
Well, I tell you what, I don't know if something happened right before the show started, maybe around 11:30 or so, but the Dow Jones is now down 450 points. It just started off, a little up with the earnings news. It pulled back a little bit and just kind of, was hanging right near the break-even point until about an hour and 45 minutes ago. And we have seen pretty steep sell-off now. I mean, the Dow Jones Industrial Average down almost 2%. The S&P 500 down 1.25%, NASDAQ down 1.5%, and even the Russell 2000, which was clearly the leader and up earlier, is down. Still a relative leader, but it's down 0.5%. So market's turned pretty ugly here in the last 2 hours.
That's excellent. They must have read my article from yesterday.
There you go. I did also mention earlier this week in my Trading Places blog, I talked about this week not really being a particularly good week. And that's not just in April. It's really throughout the year. When you get that week after options expiration, this is not an unusual time for the market to sell off. So good news is when you head into the end of April and in the beginning of May, we tend to significantly outperform what you normally see throughout the year. So it's a very bullish period, but that starts next week.
Excellent. You'll have to give us the rundown at the end of the month, what to expect seasonality-wise.
I certainly will.
Excellent. Okay, so for our weekly schedule, what's going to be happening the rest of the week? We have Gaddis Rose with us tomorrow. Can't wait to see his presentation. On Thursday, I'm going to be doing a workshop on moving averages, the various kinds, how you can use them. It should be an interesting workshop once I get it all put together. And then we have everything stock charts coming up on Friday, where one of our experts from the mothership, as we like to call it, up in Seattle, will come on and give us some tips and tricks or something new that's going on the website.
Excellent. And with that, we will wrap up. Do want to thank everybody for being with us today. Please remember to complete the survey as you exit. Inside the Lines was a new segment today. We'd love to hear what you thought of that. And just in general, what you feel of or what you think of Market Watchers Live. Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Tuesday afternoon, everybody. We'll see you back here on Wednesday. Happy trading.